So I've been trading breakouts for over 14 years, and in this video I will show you how to get into breakout trades. I will show you also what are the best pullback opportunities, what is the difference, and how to form a multi-time frame analysis and provide actual entries and how to get into trades on the low time frames. So if you want to jump to the section where I start talking about strategies and entries, here is the timestamp and you can jump right to it if you want to skip the theory. However, I would recommend that you stick around until the end because there's going to be a lot of interesting things and I will make sure to not make it too long. So let's get into the video. So generally speaking, breakout and pullback trading is actually pretty similar. Very often breakout and pullback traders are even in the same trades. However, the entry prices and the entry dynamics are a little bit different. So let's cover the basics and then I will go into actual charts and show you how to find the best breakouts and how to time pullbacks. So when we talk about breakout trading, usually, obviously as the name suggests, you are breaking out of something. Usually those are sideways consolidations or any pattern that you are usually finding. And as a breakout trader, what you usually do is that you draw your levels around highs and lows to define your patterns. And then once the market or once the price breaks out, then you get in. So a breakout trader usually enters on a breakout into a new momentum high. So here on the left hand side, you can see when the market is making higher highs and higher lows. The trader would draw a horizontal level based on past price action, past swing highs. And then once the market breaks out of that and breaks into a new high, you go with the momentum. This is very important because this means that you're going with the flow. Also, it means that you need confirmation. You need to know that the market is already moving. So naturally, you will get in a little bit later. However, you are going with the momentum, which can mean that you have more information already and you're going with the flow, which can increase your win rate. So the most important thing is, and the biggest difference is that often breakout traders may have a slightly higher win rate and it goes to the expense of a lower reward to risk ratio. This will become very clear in 1 second when we look at pullback trading. Because pullback trading can be a little bit more risky because when you're a pullback trader, you wait for the price to come back. So for example, the market is in an uptrend and then you wait for the price to pull back. So you wait for the market to come lower and then you're trying to time the lowest possible entry price. When the price is retracing, you are trying to get in for a lower price. What is the drawback? The drawback is obviously it's very hard to nail when is the pullback going to end? How deep is the pullback going to be? There are a few trading tools and indicators that I will show you in a bit, but this is the hardest thing about pullback trading. So you may have a lower win rate because you will get it wrong every now and then because nailing a pullback is not as easy. However, what's the upside? The upside is that you are in trades much earlier and then your potential reward to risk ratio increases. So as we will see later, there's no essential right or wrong or better or worse. There are very different dynamics and you have to estimate as a trader, how do you like to view the markets? What feels more natural? What feels better for you? And where do you see your edge? You don't mind a lower win rate, but you want a high reward to risk ratio. Pullback trading may be for you. Or do you like constant positive reinforcement, a higher win rate, but you don't mind if your winning trades are not as high? Then breakout trading may be for you. This is the most essential difference. And now let's go into charts and I will show you how to find breakouts versus pullbacks. So when it comes to timing your entries as a breakout trader or a pullback trader, you can choose various tools. For example, you could choose horizontal support and resistance. I will also show you how to use trendline breakouts and retests. And we will also use Fibonacci, which are very powerful and very popular as well. So basically what you are trying to do is first you're trying to define a range market. You need to be able to put the price into a box because you need to know when the price is breaking out. And then as a breakout trader, you are waiting for confirmed breakouts. Once the market is leaving such a well-defined range, then this is where you jump in. Obviously, I would always recommend to put a multi-time frame analysis on top of that. So you start on the higher time frame, determine the direction, and then you go to the lower time frame to define your areas, find areas, and then time your breakout entries. And breakout entries are very straightforward. You simply wait for the market to just close outside of a range. The most important the biggest mistake that traders do is that They get in too early because they're impatient. They don't want to miss the breakout. So as soon as the market is reaching such an area, even here probably intra-candle, this looked like a very promising move, very big candle, and then people were betting on this level to break. However, as a breakout trader, it's really, really important that you actually wait for the market to break out of your range and then only get in. The most important thing, or one of the most important things, is that not always will you get a pullback. And this is the one thing that if you choose to become a pullback trader, you have to be absolutely clear that sometimes you're going to miss a pullback. Sometimes the market breaks out and simply just takes off. And the most important thing is that you don't have any regrets. You should not have any trigger feelings, so you chase the markets. You have to be absolutely clear about what is your edge as a pullback trader. Your edge is pullback trading. Your edge are pullbacks. Your edge is not breakouts. If a pullback happens, you can be okay with just sitting back and let the breakout traders make their money. You know, this is not your style of trading. So you have to be really okay with that. You have to accept that, and that is very important. Otherwise, it can create a lot of inner turmoil, a lot of doubts, a lot of regrets, and a lot of FOMO when you see that breakout traders are making money and you are not. So not always will there be a pullback, and not always will pullback traders get entries. On the other hand, breakout traders sometimes will get into a breakout, and then they will see their unrealized profits evaporate when the market pulls back to actually make the breakout. So again, there's always a pro and con based on the strategy that you are choosing. There's no better or worse. There are very different dynamics, and you have to just accept, and you have to be okay, and you have to understand yourself. How do you like to trade the market? What feels natural to you? Are you okay with being a breakout trader, getting in on the breakout, seeing the market go in your favor, coming back to perform the pullback, which it often does, not always? You see that your unrealized profits evaporate and then it takes off. Or are you a pullback trader and you don't mind that the breakout traders sometimes make money and you're not in the trade? Like something what we are seeing here. You can see the market was in a very well-defined inverse head and shoulder. Let me draw it in, and I need to change the font color. Give me a second, and then you can see this is an inverse head and shoulder. Breakout traders were able to jump on it here and then make money, and there was no pullback. So if you're a pullback trader, you have to be 100% okay with missing such opportunities, because this is not your edge. And this is very, very important as a trader. So assuming you're a breakout trader, this is usually where you get in. And then as a pullback trader, what you are usually doing is that you are either, or you have to define, how do you actually get into pullbacks? What is the pullback place that you are waiting for? Is it a previous support level that is turning into resistance? Is it a cluster, for example, of a breakout entry, of a support turning into resistance and a moving average? Or maybe even a Fibonacci level, which I will show you in a bit. And then what you're doing is you wait for the market to get back to the level, and then what I would recommend, don't just jump blindly on the market just because it has reached a level. Wait for actually some price action, and you could go even to a lower time frame and then time your entry with a breakout. For example, let's try to do that. Now we're on the 30-minute. Let's go to, for example, the 5-minute. And you can see here on the 5-minute we have a microstructure, and here you can see we can draw a horizontal level, and we have an actual head and shoulders here. So you could try to do that. You go on a higher time frame, you define your breakout area, then you wait for the breakout to happen, you wait for the market to come back, and if you get a lower time frame microstructure, this is where you can then take an entry. And you could take this to another extreme even, and you could even do another pullback on the lower time frame. And that is how you can micro time your entries, lower time frame to higher time frame, or actually higher time frame to lower time frame. And that would be also an approach how you can do that with pullback trading and breakout trading. I hinted at previously, Fibonaccis are very important. Fibonaccis are super powerful tools, and Fibonaccis are great for trading pullbacks. So what you want to do is you wait for the market to break, for example, the 50-period moving average, which is one of the most important moving averages. You can see very often when the 50 is broken, let's change the color, new trends often emerge. So you can see on a break it goes here, on a break it goes down. Not always will it work, so sometimes the market will fail. That's totally fine. Nothing works 100%. I repeat this in every video that I make. And then here we have the same thing. We have a very strong breakout, and then as a pullback trader, you would wait. And where do you get in? You could get in right at the moving average here, or you could also lay a Fibonacci on top of that. And you can see here we have the cluster of 50 and 38 Fibonacci. So we have a super, super strong area here. We have a 50-period moving average on the 1 hour, very important level. We have here the Fibonaccis, and that all comes together. You could also then draw a support resistance, wait for flip zones, and then again you could go to a very low time frame, 15-minute, 5-minute for example, and then look even to time your entry on a different way. You could look for triangle patterns here, and then time your entry on a much lower time frame if this is what you're after. And there are many ways how you can use it, but Fibonacci retracements are super important. And if you don't know how to draw them, just a quick reminder, what you do is you go to the beginning of an impulsive move, you go to the beginning of a trend. In that case, the trend started here on this big jump. Then you see where's the trend ending, or the first trend wave ending, here on this candle. And then you see we have a 50% perfect retracement, where is also the 50-period moving average. And then you have a beautiful reaction on a 5-minute. You may even have, you can see we have even another pattern as I've seen on the 15-minute. You have a triangle, and then you could get in on the breakout. And this is again how you could do higher multi-time frame analysis and time your trades that way. Let's just look at the British pound US dollar, a very popular Forex pair, and let's look at how this could have been approached. Again, we want to look for patterns. First of all, it's always nice if you can put the price in a box and then wait for the breakout. That's usually how it goes, because breakouts and pullbacks are usually formed after the market gets out of those ranges. You never want to trade in those ranges. A very, very big key characteristic of trading. So here you can see we have an inverse head and shoulder. On the downside, left shoulder head, the right shoulder somewhere here. Breakout traders would naturally get in here on the breakout. Pullback traders then wait for the market to get back to either the pullback area or the moving average, or even both. You could also probably draw a Fibonacci here. Where did the trend start? You can say it started here. You could also make an argument for here. Let's say, I would say personally, the trend started here after the market bottomed out. And then here you can see the market started making higher highs and higher lows. So let's actually see that. Where's the highest point of this trend wave? It's either here or here. And you can see we have the Fibonacci from here to here. And the retracement is a perfect 61. If we draw the Fibonacci here, you can see we have even a perfect, also perfect 61 retracement around here. So again, a very, very hard cluster for the price to break below. And it's ideal for timing pullbacks. When you see such a big cluster, it's a very, very good chance that the market will actually respect that. And of course, don't jump blindly on it. You could go to the 5-minute, for example, to time it on an even lower scale. But if you see that the moving average, the 61 fib, and also the previous breakout area are coming together in one place, those are high probability and high impact clusters. And then you can see the market traded higher. You could even make a case for, okay, I want to trade another breakout. Then here on the next trending leg, you draw your pattern or your zone somewhere around here. Whoops, let me grab this. You can see we can nicely define the market here. We can draw our Fibonacci from here to here. Where's the end here? And you can see when we zoom in, Fibonacci started from here to here. The pullback, perfect to the pip at the 61.8 Fibonacci, and that is where you want to get in, or roughly around that. We could go to the lower time frame and see how did it look back then. And you can see you could draw a microstructure here on the lower time frame, use your trend line tool and wait for the trend line to get broken out. And this is then how you can really nicely time your trade. On the lower time frames, you can get in a very, very tiny and tight stop loss, which boosts your reward to risk ratio. And this is how you could approach your trading with this pullback approach. And then let's just, because it's just here and it looks very interesting, at the top the market has been doing the same. We have here a range market. Let's define it with a horizontal level, and you can see breakout and pullback happen very close by. I would say that the Fibonacci top could be drawn here. Here's the low of this trend move. And let's make it accurate. You can see already the Fibonacci is again a very high impact cluster, 38.2, and the breakout level come together here and provide you a great opportunity for pullbacks as well. So I hope you got something out of this video. Breakouts, pullbacks, again, no better, no worse, nothing wrong, nothing right. It really comes down to your personality as a trader. How do you view the markets? What dynamics make sense to you? And how do you feel comfortable? Let me know in the comments below which one you like more, breakout or pullback. And then I will be back on Tuesday with another Tradeciety Tuesday video. So stay tuned. Thank you for watching and happy trading.